We have a lot of developments this morning in terms of markets. Oil prices are on the way up again. The national average for regular gasoline is $2.29. That's down more than $1 from last year. However, as oil prices have declined 50% in that time, gasoline prices have moved. But if you look at crude oil today, the tensions happening in Syria are impacting this market. Phil Flynn is watching, and he's at the CME Group in Chicago right now. We're inching toward 50, up 2.5% on oil right now. Phil, what's the sentiment down there?
Well, the sentiment is that we may have hit a bottom here. Not only do you have increased geopolitical risk because what Russia is doing in Syria, you also have more and more signs that we're seeing declines in production. Private reports are showing that OPEC production, it fell last month. We saw U.S. production fall 40,000 barrels a day last week, and that is the seventh time out of the last 8 weeks. But look at gasoline prices. They are up big, and you would think part of this has to do with Hurricane Joaquin. But really, most of the big price spike is in the Midwest, so I guess they think this hurricane's going to hit Indiana. I don't know, but I think it's refinery problems in the Midwest, turnarounds that's driving those prices higher. But you can't underestimate this market. A lot of strength right now. Back to you.
Yeah, for sure, Phil. Thank you so much, Phil Flynn. And I know, Keith, you've been looking at energy in terms of opportunity here. You started to buy it.
Yeah, I have no bias, Maria. I like to buy things. You know, the reality is that, volatility is key in the oil market. So, again, if you look at OVX, which is equivalent to the VIX in the oil market, it had been trending between 50 and 60. That's now breaking down towards 45 and lower. So if you want to own oil for real, you have to have lower volatility. That is plain and simple. After something crashes, you got to wait for volatility to clear. It's not that complicated. I know it sounds like a little geeky, but the reality is that that's what I'm looking for. So watch OVX against WTI. And again, the two catalysts that Maria pointed out are clear and present danger. Syria, obviously. And again, the Federal Reserve getting more dovish is bullish for oil. Period.
Yep.
So you like oil is the commodity, not oil the stocks?
Right.
Okay, so you're staying away from those. Well, no, there's been an unbelievable amount of M&A, as the Wall Street Journal reported yesterday, in the with the oil producers, despite the fact that we've seen oil prices down where they are.
Look at those valuations of the oil stocks; they look good.
Yeah, on the oil stocks, I don't think you're going to see. If you look at Exxon, for example, it's very unlikely that it retests its lows before year end. If you have a dovish Fed, very unlikely. But again, how much of that do you want to own as an institutional investor, and can you get out? I think it's more of a day trade. I'm much more comfortable with crude itself.
All right.